Hi, my name is Russell Goebel. I am the product manager for Advanced Supply Chain Software here at Ibis, and I'll be going through parts of our functionality in our Advanced Revenue Management module. So thank you for joining us today. So we're talking about Advanced Supply Chain Software. This is an embedded Dynamics AX module or series of modules. If you're familiar with Dynamics AX, it is a layered architecture, so our solution sits in what's called the ISV or Independent Software Vendor layer in the code base. So we are, from the end user perspective, it's invisible whether or not we developed any functionality versus what Microsoft developed. The focus of our discussion today will be under the Advanced Revenue Management module that's part of the Advanced Supply Chain Software Suite, primarily around pricing and rebates and what we call sales programs. I will not be discussing commissions or bid management today. It's out of scope for our discussion this morning. Okay. And again, these are individually licensed modules that can be installed in Dynamics AX. Today, I'm going to be working in Dynamics AX 2012 version R2 and with the CU7 or cumulative update number 7 patch layer. So when we talk about pricing in Dynamics AX, sales prices in AX are defined. They can be defined at the item level. Those are kind of across the board or company-wide sales prices. They might be the equivalent of a list price. Then we can get a little bit more granular and get down to the item, site, and product dimension level. When we talk about product dimensions in AX, we're talking about size, color, configuration, and style. Then the trade agreements in AX, that's really where you get your true pricing rules, particularly your scenario-driven, your periodic pricing rules that are really broken down by item and customer combinations. And those can be item group combinations, customer group combinations, and that sort of thing. Then we also have sales agreements in AX. Those are very specific fixed price blanket orders for a customer and a set of line items. So that's just a standard agreement. That's a blanket order, an agreement basically to buy over a period of time. So that's not, we won't be talking about that today. We'll be focusing primarily on trade agreements. You do have project level pricing as well. So if you're using project accounting in AX and managing projects and sales prices that come out of those projects, might have the unique pricing as well. So it's important to understand how pricing is handled in AX at the trade agreement and rebate agreement level. It's got what we call in the industry the table group all relationship. So I can basically take a table level relationship. So I'm talking about basically an individual item or an individual customer, and relate it to perhaps a group. So I might have a single item related to a group of customers, or a group of items related to a single customer, or perhaps all items will have a particular discount for a group of customers, that sort of thing. Things that we've added to the standard AX product, and again, when I say standard AX, that's what the Microsoft has developed. Our solution, the Advanced Supply Chain Software solution, has added the ability to, one, add a customer to multiple price groups, so they're not associated with just a single group. They can be associated with multiple price groups, and then it gets down to whichever trade agreement is valid. And we've also allowed the ability to define a trade or rebate agreement at a selected group level. So in between a single grouping or all items, we can also just say multiple product groups. We can say these 3 selected groups are valid for this trade agreement, but of course other groups would not be. So that's an extra level of a set of relationships you can create between your products and your items. So what's the key features of the Advanced Supply Chain Software Revenue Management module that we've added on top of AX? So we take the standard sales pricing that they have in AX, and we can build up that sales price to based on a configurable cost basis. And those can be data effective build-up templates. And ultimately, what's important there is they protect your margins as your costs change. In standard AX, if you're basing your sales prices on a margin or a build-up methodology to a cost basis, every time that costs change, you need to go and recreate your trade agreements. We've added the functionality to where you don't have to do that. And then we have deal management, and that's what we call in AX a sales program, and that sales program allows you to manage multiple trade agreements, multiple rebate agreements, multiple promotions at kind of a program level, and then you can use the pricing workbench to help you scope out what's really going to be your expected margins down at the item level, both as an estimation as well as look at the actuals after the fact. We have new qualification criteria for discounts. We'll talk about that. And then we have advanced promotional options beyond just the discounting function that's in the standard product, where we can give out promotional items and services and have tiers by currency and weight. Supplier rebates is a key focus of our solution. So at the base level, you have vendor rebates where you buy X from a vendor and you're going to get a Y rebate back. We can support that, but in the distribution world in particular, and particularly in the supply chain landscape that we're dealing with, you can have supplier rebates that are sometimes called chargebacks or billbacks or special price agreements. Ultimately, what these are supplier funded or supplier supported promotions where your sales activity and the usage of a particular promotion in a sales transaction will drive the ability to send a rebate to your supplier with proofing documentation that says, we've sold this based on our promotion that we agreed to. Now can you reimburse me on the discount that I provided to the customer? Or it could also be a rebate I provided to a customer. We can track customer deductions and cost to serve. That's another piece of the functionality. And then we have commissions and bid management functionality. Those last 3 bullet points are not really in scope for today's discussion. So when we talk about trade agreements, what kind of trade agreements do we have? We have sales price agreements. We have line discount agreements, multi-line discounts, total discounts, and sales recommended price. So sales price agreements are just that. That's a trade agreement that's very specific to creating a date effective sales price for an item or group of items in a customer or a group of customers. Line discounts and multi-line discounts perform much of the same functions, except that line discounts are qualified and applied only at an individual sales order line level, whereas a multi-line discount can be applied across multiple lines, qualified across multiple lines, and then those discounts will be updated across those several lines. Total discount, that's an order level discount. And then we have the sales recommended price. It's a special type of trade agreement we have added to the solution. It's meant to track a list price, but what's important about it is we qualify that and show that at the sales order level so that your customers can see a comparison price. You're getting it, here's your list price, here's what you're actually getting it from us, so look at this great deal that you are getting. And then we have types of rebates. So rebates, just to make sure we understand the terminology, a rebate is a post-invoice transaction where my customer has achieved some sort of threshold, and that they've crossed that threshold, whether it's a dollar value or a quantity threshold, and by them crossing that threshold, we will then issue a rebate to that customer in the form of either a check, basically money straight to the customer, or more likely a credit on the account for that customer, so it lowers their balance. So that's when we talk about a rebate, but the supplier rebate and a customer rebate. The customer rebate is what I just described. The supplier rebate is another transaction qualified concept, but ultimately I'm going to send an invoice to my supplier to get money back based on our agreements, rebate agreements that we have in the system. And things that we've added to the system are rebates that can be driven. They're rebates that are going to your supplier, but they're qualified based on what I'm selling, because I've got an agreement where we're sharing promotion dollars with my supplier. So in AX, we have other types of rebates. We have the trade marketing allowances. That's a standard AX option. That's a different type of rebate that's really meant to share promotional values with your customer. And that would be a situation where you're a manufacturer or a distributor and your customer is a reseller of some sort. And then you have special price agreements, and ours, that's something we've added to the system. That's where I have a customer rebate that I'm giving to my customers, but then I am going to pass on that rebate value in part or in whole back to my suppliers. So that's where we have a customer rebate linked to a supplier rebate. We have chargebacks. Those are a vendor rebate that's tied to my customer trade agreement. So whenever I am executing a line discount or a sales price on a sales order, that's going to trigger a rebate transaction I'm going to give to my supplier, because we've previously agreed that they will subsidize either my sales prices or my promotions in the form of a discount or maybe promotional goods. Cost deviations is a special type of rebate where it's a way that I can offset any unforeseen purchase price increases. So I've got a standard purchase price that I've agreed to with my vendor, and for whatever reason I've had to pay more because maybe freight went up or whatever reason the commodity value changed, and I can kind of get a reimbursement back from my supplier, based on those variances in my cost. And then I have other types, freight rebates. That is just really a journal for offsetting customer freight costs. We're not going to talk about that. And a SPIF, which is really a way to capture vendor reimbursements to your sales force, so they're really captured through commissions. But ultimately, what I'm going to be sending back to my supplier is a rebate invoice for them to reimburse me on those commissions. So these are just a screenshot of the rebate program types. So you'll see we have chargebacks, we have cost deviations, standard rebates, SPIFs, SPA funds. A SPA is a special price agreement. A SPA fund is the funding source for that agreement. So the SPA is really the rebate I'm going to give to my customer. The SPA fund is the funding source, or the money I'm going to get back from my supplier based on that SPA rebate. So when we talk about the order to cash cycle, in kind of everyone's standard view of it, and particularly a lot of ERP packages, this is how they approach it. You have your order entry process, and then you might have an approval process where you finalize the prices you're giving to your customers. But then ultimately you're going to have a pick, pack, and ship process. And then once it's shipped to the customer, you send an invoice to that customer, and hopefully they will pay you the money you've asked for. In the supply chain world, in the distribution world, that does not always equal you realizing the margins you had to go in. But a lot of those extra things either go into affecting your margins or having to be kept offline because the system doesn't support capturing all of that. So that's why when we talk about the order to cash cycle, we're really referring to a different order to cash cycle where we're going all the way to the end of achieving where I want to achieve my margins after I've gotten all my money back from my suppliers, as well as dealt with any customer deductions that may have been the case. And then so what we have from a sales or entry standpoint, we've got all the agreements and trade agreements that are going to go into it, and then we have after we do the standard pick, pack, and ship process at invoicing, I'm going to be calculating those rebates and those commissions, and those rebates and commissions will obviously reduce the amount of money that I'm going to be, it's going to reduce the bottom line that I'm going to have from that sale. And then there's also the chance of my customer not paying me everything. And some of those, that might be very good reasons. They might have baked in they might have assumed that their payment will be factored in the rebate already. So you got to reconcile the rebates you're planning to give out with the deductions the customer is already taking. Or there might be a service level agreement where you delivered late, so your customer doesn't have to pay you as much, and you have to go reconcile that as well. So it's important that you take those deductions into account. And then obviously if you've got promotions, either in the form of a rebate, discount, or promotional goods that's being funded by a supplier, you got to get that money back from your supplier. And it's really not until you've dealt with those deductions where you've accounted for the fact that you're giving rebates and commissions out to your customers, and then you've gotten some of the offsetting impact from your suppliers to underwrite those promotions. It's not till you really collect all that money and have visibility of that at the sales order and item level that you realize your margins. And that's really, when we talk about the order to cash cycle in a distribution world or a supply chain context, that's really the full scope that we're dealing with here. So first of all, you're going to have intelligent sales prices. In the standard product in Dynamics AX, you can have very dynamic sales prices in that you can associate items and customers and multiple combinations therein, down to a site level, down to a unit and measure level, and down to a data effectivity level. But still, ultimately, the sales price you're plugging in there is one you figured out offline. And we're trying to bring the visibility of how you may build that sales price. We want to build that visibility and that functionality into the product. So what we've built is the ability to peg a standard or a cost basis to a sales price build-up methodology, allow you to build up to achieve a list price, and then take that list price and mark it down to achieve a special sales price for a particular customer or set of customers. And that's really kind of the big thing we've added to the sales price trade agreements in AX. What's key about it is as your costs change, you're not having to redo your sales prices. Your sales prices will be calculated accordingly based on that new cost basis at order entry. So you're protecting your margins. When we talk about the cost basis, we're talking about a market cost. It's a user-defined cost that may be a commodity item, something you import from your vendors, a new price list. That may not represent your true inventory cost or your true item cost, but they are a market cost that's properly understood, and you may want to peg your sales prices to that. Or you have the base item cost. This is the inventory cost that you have in AX. It can be represented either a landed cost or a standard cost, depending on your methodology. We do capture something we call the average landed cost, and that there's a lot of functionality we've added to the system on how you capture that. But the base idea is it's my purchase prices plus any additional cost in getting that item to myself or to my customer, through the inbound freight, customs, duties, those sort of things. And it's basically an average value I might peg my sales prices to, or my last purchase price. So that means every time my purchase price changes, my sales price would change accordingly. We can support that. Commissionable cost is a separate type of thing that really feeds into the commissions logic, so I'm going to skip that for now. Market cost. This is where we have a market cost version. In AX, you have cost versions for your item cost, your purchase prices, your sales prices, those standard kind of across the board prices I talked about at the beginning. We use that engine to also import your market costs. So you can import them in. They may be effective at a future date because it's next month's price list you're getting from your supplier. You can go ahead and import those in ahead of time, set the activation date accordingly in the future, and then we'll just pick those up when they are truly active. And then we capture these cost changes in a historical cost log, so you have visibility when your costs change, and that might have been why when your sales prices changes, so we can tie all that back together. Okay? And this is just a screenshot of our sales price buildup. So again, you define your amount in currency is actually going to be a calculated value. In this case, this is a single table relationship, so a single customer related to a single item. You don't have to do that. It could be a group level relationship as well. But ultimately what I'm doing here is I'm saying my cost basis is my average landed cost in this scenario, and I'm starting with that number, which was 132, and then basically I'm adding on a standard margin on top of that, and I've got a reason code that tells me what that represents. I might have an overhead percentage that's pegged to that standard margin. I might have a multiplier that's going to have the net effect of reducing the sales price. And then I might just have a flat percentage I'm going to take off because this is what my marketing department is wanting to give out to my customers at this given time. And if I do that, then I can associate that with a GL account, so I can capture that marketing money that may be an internal funding source, not to be confused with maybe a supplier funding source. And then I can specify a rounding rule so that my sales prices always result in the same thing. If this sales price or some of the discounts for this are actually being funded by a supplier, I can hook those together. But this is really how I'm going to do very dynamic, very differentiated sales pricing in AX for a group of customers or a single customer, as well as at a product level or a product line level or a product group level. So that's kind of the sales price story. So obviously that's really the foundation of what I'm going to be going to market with. But then we have promotions. And so when we talk about promotional goods and services, those can be tied to a multi-line discount. So AX has a multi-line discount trade agreement. We have utilized that and modified that to give it more power. And some of that power we've added is the ability to have promotional goods and services. So those promotional goods are additional goods are additional items that are going to go onto the sales order when that sales order or those lines in the sales order qualify, as well as it can be a free or discounted service. In AX, what we're really talking about there is the charges that are applied to a sales order. So if you've got a freight charge that's calculated on a sales order, we can actually offset that with a promotion where you get free shipping if you're buying a certain amount. And our promotional goods functionality is a true BOGO or buy one get one free type of scenario. And of course, that's a generic concept. It may actually be buy 10 get 5 at half off. So we can fully support that. We can receive one or more promotional goods. I can also have a promotional price when I'm qualifying that. I can limit how much I'm giving away, of course. And then I can qualify a group of items for a discount, but then discount individual products within those groupings. Likewise, I can have minimum sales order lines that qualify this promotional for these promotional items, a minimum quantity, a minimum weight, depending on how I track these type of, as well as a specific item. So I might say this group of items qualify for a multi-line discount, but you've got to be buying item X of that group because that's really the item that's driving the promotion. That's the good that maybe your supplier is wanting you to really be out there pushing. And of course, everything here can be data effective. Okay, so this is just a screenshot on how I define this. It's a multi-line discount agreement. That's a standard AX trade agreement type in AX, but we then use a promotional items screen where I specify the additional items that are going to be going on to the sales order, of course, when you qualify. And then we can specify the BOGO type. So this is basically saying that in this particular screenshot, this is saying for every 10 I buy, I'm going to give one of these type of products at a free at no cost or no charge. So that's a free good that we're giving out for every 10 the customer buys. That's on a quantity basis. It can also be a dollar amount basis. So if I say my BOGO type is per amount, then that might be for every $100 I buy, I'm going to give one of these products out. Or I can set my BOGO type to be total, and that just basically says I crossed the threshold that qualifies me for the multi-line discount. I give them that free good, and I don't really care how much farther they go over that threshold. They're still just getting that one free good in this scenario. So those are the options that I would have. And then I can also set a qualification item. That's again where I may say one or two specific items must be purchased, and then I have multiple items that may qualify along those same lines. It's explaining that if I give a charge for freight, I can offset that if I qualify for a particular multi-line discount. So now we get into the rebate side of the equation. So those are just different types of promotions, but perhaps those promotions are actually funded by my supplier. My supplier and I are, and my supplier may be a manufacturer, it may be a type of distributor, wholesaler, so that sort of thing. But ultimately, I'm working with them to sell goods, right? Because I'm a distributor for them, and I'm closer to the customer than they are. I have relationships with the customers, so they're going to work with me to make sure that we promote those items. So that's where the vendor rebates come in. Again, at a base level, we have vendor rebates that are saying I buy that are really purchase oriented. I have purchase thresholds I need to cross, and I'll get a rebate back from my supplier. But in the concept that we're focusing on today, this is really sales-facing promotions, customer-facing promotions that I'm going to have sharing the cost or sharing the promotion value with my supplier. So I'm going to get that money back, that reimbursement back from my supplier in the form of a rebate. And so we have two types that really drive that model. One is the special price agreement. That's a SPA from a terminology standpoint. That's basically saying I'm giving a rebate of a certain amount to my customer, and I'm going to pass that on back to my supplier. It could even be a coupon, for example. But basically, it's a rebate that I'm going to give to my customers, and I'm going to pass that on to my supplier. And that's why you're going to hear sometimes the term pass-through rebate. That's really what the special price agreement is trying to cover. Then we have a chargeback. That's where I'm saying I'm giving a particular type of promotion, a specific discount, something of that sort, to my customers, and I'm going to, once I use that trade agreement, I'm going to then generate a rebate record that I can accumulate over a period of time to ultimately send out a invoice to my supplier to get money back. And obviously the key part of that is the sales transactions I have tracked. I know when I've sold it to that customer, so if there's an audit requirement with my suppliers, I can support that with the information we keep in the system. And then we have the cost deviation. We're going to focus on that today, but ultimately, again, that's a special type of rebate to help my supplier reimburse me when purchase costs kind of go out of whack to what we've agreed to. Focus of what I really want to get to here is the deal management. And so when we talk about the deal management, we've provided an option called sales programs. So on the one side, I've got my pricing and promotions. That's my customer-facing promotions that we have in the system. Those are going to be in the form of a trade agreement that is a sales price, a discount, a multi-line discount, promotional goods, or it could be in the form of a customer rebate that is money I'm going to give back to the customer after invoicing. And on the other side of the equation, I have my supplier-supported promotions. All the promotions that are going towards the customers are being supported by my supplier. So how do I want to put that under one umbrella and track it and really deal with that at a program or marketing level? And it may be tied to a catalog, could be tied to a channel, could be tied to a campaign. So that's where we have a sales program. So the sales program is really kind of the umbrella entity in AX to manage the funding agreements I have with my suppliers, the trade agreements I have for my customer discounts and sales prices, and the rebates that I'm going to give out to those customers as well. That's all can be captured under the sales program and managed at that level. So that when I'm executing on this, I've got customer pricing and discounts that are in sales, I've got promotional items and service giveaways that are in my sales orders, and then I've got customer rebates that are generated by my invoice sales orders. Those can then generate rebate records that will really result in invoices I'm going to send back to my supplier to get money back, either in the form of a check or it might even be a credit to my account, so I can lower my balance, my purchasing balance with my suppliers. So that's ultimately what the sales program allows you to do, is to manage this at the top level, really at the program level where people are dealing with, are really managing this. When you build these sales programs, we have a pricing workbench that allows you to then do some analysis. You can see at an item level how each of these discount agreements are going to affect the bottom line, particularly as you've taken into account the money you're going to get back from your supplier. So the sales program that allows me to track my prices and my deals at a program level. One of the shortcomings in AX is my trade agreements and my rebates are not named in any way. They're just really records in the system, but I need to have them, they may be tied to a special campaign or a special program, maybe my fall catalog, that sort of thing. The sales program now allows you to really manage it at that level. You can have special commission arrangements with the sales program, and you can associate multiple product and customer groupings to a single set of promotional boundaries. And all this can be data effective at the program level, and that will impact all your rebates and trade agreements, the boundaries for those things, underneath it. It dramatically eases the creation of these agreements. When you're creating these in AX outside of a sales program mechanism, it can be a rather unruly to deal with all these different agreements and hook them together. The sales program really allows you to really manage those and generate those very quickly. And then, of course, there's a review and approval process on top of that, and that includes a special workflow that we've added to AX. So this is a screenshot of the sales program. I'll get into that in the demo very shortly. And then we also have the workbench is where I really I can see the output of that sales program setup. I can see it in a pending state, review how it's going to impact my margins, possibly even build some scenarios. I can do some simulated sales orders. They're not real sales orders, but they kind of exercise the muscles of those sales program agreements I've created and let you see how it's going to truly affect it, perhaps at a customer level you may be negotiating with. And then you can actually make very quick changes to the discounts you're applying and roll those out to your trade agreements without having to go into each individual trade agreement and make a change. Sales programs can be intermittent as well, so you might set up a large time period for those sales programs, but set them up as intermittent so that you can define active dates where that sales program's effective. It might be the last week of any month. It might be a seasonal thing that you want to run, create the sales program for multiple years, and just have it effective in a particular time of year. We can support that. And that's the workbench, and I'm going to get into that in just a second. One other thing we've added to this that's key in standard AX, this is both a strength and a weakness depending on how you do business. You can have different groupings of products for your prices, for your line discounts, for your multi-line discounts. Unfortunately, there's nothing in AX that forces those items that are in those different groupings to be the same set of items. So a lot of times you're dealing with products at a product line level, so you really need just one grouping and that apply all your pricing rules to. That's where we have the master product group. That's something we've added to the system. You can use this instead of the standard price groups that are in AX. So in doing so, we might want to unify the unit of measures that are for those product groupings so that you can easily set up a standard set of prices for all those products specific to the unit of measure in one fell swoop. So that's really what the master product group is. I like to say it's one group, one price group to rule them all. We're going to get into the demo. I'm going to revisit this slide at the end. Now we are in the Sales and Marketing module in Dynamics AX. I am going to go down in the Common Forms. We have a section called Pricing and Promotions. So I'm going to click on All Sales Programs. So So again, this is setting up a new program for a particular set of promotions. And I'll give it a name. I'm going to just call it the April-May promotion. It's got a number sequence that's predefined in the system. I'm going to set this up for an individual group of products. In this case, I'm going to use the master product group. That's the price group type I've specified as my default. I'm going to say group number 8. This is my Fabricam products. That's a vendor account that I buy from, so it represents a demo data manufacturer, if you will. If you've been around the AX world for a while, you've probably seen that name before. And I'm going to set a start date. So I'm going to say this starts at the beginning of April and it ends at the end of May. Okay, so these are the boundaries that I've set. I'm going to define my rebate program because I've got a funding source. I'm negotiating this with my vendor. So I'm going to choose that program type. When I do that, it's going to automatically bring in the accrual accounts that are set up at the program level. And then I'm going to define my funding source. So in this case, it's going to be Fabricam. And then I'm going to say accumulate by invoice. Now I can do that by a period of time, but for the sake of this demonstration, I'm going to just do invoice. But you can do a period of time and accumulate it over that period of time. My owner, it would default into my user account if I had that properly associated with an employee. So I'm going to say Julia is the owner of this particular sales program. She'd represent either an account manager or someone perhaps in the marketing department or even a price coordinator. And I'm going to just define the journal that we're going to use. I'm also going to say that I want my rebate agreement numbering to be associated with my sales program. So basically it'll take my sales program ID and then iterate like a -1, a -2 type of thing for my rebate agreements. So now I'm going to save this. So now this is created my sales program. I'm going to collapse that, go to my funding agreement. And so this is where I create my rebate agreements. In this case, this is my vendor rebate agreements or my supplier rebate agreements. So I'm going to click Add Chargeback. That's going to create my chargeback agreement. What's nice about this, because I've done this at the sales program level, my date range is defaulted in, my product grouping has defaulted in, my funding account is defaulted in. So really all I've got to do is define the makeup of this particular funding agreement. So I'm just going to say this is going to qualify at a quantity of 10, so the customers have to buy at least 10 of this. And then I'm going to go down to the lines here. And hopefully this isn't being clipped by the screen too much. I'll say from a quantity of 10 and then to 20, I'm going to expect to get $4 back from my supplier. And I'm going to create another line, and that's going to be from 20 and above, and then we'll say 5 back. So that's an amount per unit. It could be a fixed amount, it could be a percentage, but I'm just going to say I've agreed that whenever I sell these products, my vendor is going to give a rebate back to me based on how many I've bought. So in this case, if it's over 20, they'll give $5 back. If it's between 10 and 20, it's going to be $4 back. If it's under 10, then we don't get anything back from the supplier. But likewise, I'm not going to be giving anything to the customer as well. Again, this is a funding agreement really tied to my promotions I'm going to give my customers. So I'm going to collapse my funding agreement form, and then I'm going to go to my trade agreement. I'm going to create a new trade agreement. I'm going to say this is going to be for a line discount, and I'm going to click OK. If you're familiar with trade agreements in AX, this is much easier than how you would typically enter them because it's going to default in a lot of my valid information. My date range has already been set. My product grouping has already been set. So really, I just got to decide on what customers are going to be able to take advantage of this. I'm going to say customer group number 2. And then what's the value? Now this is a line discount, so I may give a percentage off, or I may give a fixed amount off. I'm going to give a fixed amount off, and so I know I'm getting some money back from my customers, but I'm very aggressive in trying to win the sale. So I'm going to give $6 off per unit, and that's from 10 to 20. Okay, and I'm going to save that, and then I'm going to copy the line, and that's going to give me another agreement. But this one I'm going to just create another tier. So I'm going to say for this one it's going to be $7 for any that I give off above 20. So I'm going to say my from quantity is 20. I'm going to set that to 0, which ultimately equals infinity from the AX perspective. So I've got a tiered discount here where I'm giving $6 off per unit that I sell, in between 10 and 20, give me $7 off per unit if I get above 20. So I'm obviously being very aggressive in what I'm going to market with here, because the products in this grouping are usually priced between $30 and $50. Okay? But what's key here is I'm going to link these to my funding agreement that's part of the same sales program. So what's going to happen here is this is going to be funded by, or at least partially funded by my supplier. Okay? So I'm going to post these agreements. Now these are posting them, but they're not really activating them. They're actually in a pending state until such time as I activate the sales program. Okay, so now I've created a simple sales program where I've got a couple of trade agreements for a group of customers that is a tiered discount. So it's quantity based. They got to cross a couple of different thresholds, and when they do, when they cross each subsequent threshold, the discount gets better, and it's linked to a funding agreement. So I've got a vendor that's at least partially funding this sales program. I don't want to activate it just yet. I want to go and look and see, how's this really going to affect my expected margins based on what I know. So I'm going to go to the pricing and promotions screen. I'm going to hit pricing workbench. And this is where I'm going to create a query. So I'm going to say my master product group. I'm going to choose the master product group that I just set up. I want to see this down at the item level, so it's going to explode all the items that are in that grouping, so I can see this down to each one of those items, because they're going to have different costs and sales prices at the item level. And I'm going to choose my period type, so I'm going to say this is a monthly period, and then of course I want to just let's take a look at April 2014. Okay, I'm not going to get it down to the site level. I haven't decided to make this that granular. I'm going to click refresh, and it should pull all the items in. Let's go look at the items themselves. It might be that I did not associate the items that I wanted to associate. I've got a tool here. Oh, yeah, I got to set my master product group. I'm changing the master product group for this product, and I'm going to do it for this product as well. So these are Fabricam products. I have associated that, so let's go back to my pricing workbench. Click refresh again. Now it's going to go out there and say, do I have any items that are part of this product grouping? I do have one. I do have these two items. It's going to pull in the known sales price for those items at the customer level. It's going to pull in the discount for the agreements that I have in place. And it's also going to show me the chargeback value I'm getting back from my supplier. So then I can take my sales price, deduct my discount. That's reducing the revenue I'm going to get back from my customers. But then I can also add back the amount I'm going to get back from my supplier, so that eases the pain of the discount I'm going to get. Gets it down to a net per sales unit. If my sales unit measure was different than my inventory unit measure, it would convert that into my inventory unit measure. In this case, they're both the same. And then it offsets that with the cost. And ultimately, I can get down to my margin level at that individual item, see what the margin percentage is, based on when I'm hitting across a different threshold. So that's really what the pricing workbench is meant to show me. What at the item level, when I apply this promotion and I look at both the discounts I'm going to be giving out, the money I'm going to be getting back from my supplier, what is the margin I can expect to hit when I'm running these promotions on that. I could even go and simulate a sales order and really kind of look at, okay, if I look at taxes, look at freight, really and look at commissions, what am I really going to be looking at there? So I can do a simulation in that scenario as well. Assuming, over time you're going to get a lot of records in this form, so you can do some filters. I only want to look at what I've got for pending. So in this case, I've got pending agreements. That's what I'm looking at. But if I wanted to look at the active agreements, that would clear the form, because I don't have any active agreements with this particular query. But I can sit here and I can look at that and say, I'm going to look at this and see, you know what, I don't really like what that's going to do to my margin. That's too aggressive of a discount I'm going to give. So let's edit that. Let's say that I want to change that discount to $5. Click OK. It will update the lines accordingly, and I can see what's my margin going to be, which is pretty slick. This is temporary. I haven't updated any actual agreements just yet. I'm just kind of simulating here. I'm going to edit this one. I'm going to reduce this one to $6. So if I buy over 20, I'm going to give out a little bit less of a discount. I'm going to look at that, and say, I like that. I like the margin hit that I'm going to take there. So I want to make sure I update those trade agreements, and it will go and update those trade agreements in the background. Don't have to do anything else. I'm going to update the first tier as well, and that will do that. And so now when I go back over to my sales program, just hit F5 refresh for sanity's sake. If I just look at the details of that trade agreement, then I will see now that it has been updated with that lower amount. Oh, that's the wrong one. Go back into the one I was just on, I'm sorry. If I go and look at those trade agreements, I can see that my agreement has been updated with F5, and it has been updated with the lower values that I put in there. So I very quickly made changes to the trade agreements without having to drill in to the agreements themselves based on as I was doing the analysis at the Workbench level. Okay, so now let's say I'm happy with that. I'm going to roll out that sales program. Go back into it. So this is where, because understand this could be a lot of agreements I could have in here. In this case, I just have a funding agreement, which is a rebate agreement, as well as trade agreements. I want to activate those all at one shot. So I'm going to do that. I'm going to say I've got the person who's going to activate it. So I can activate all of these agreements in one approval process. So what's important here at the sales program level, I'm able to define my funding agreements. I'm able to define the metadata, or the boundaries for all those agreements. And so my accrual accounts just default into my agreements. I don't have to go manually add that. If I wanted to associate a particular GL account with these line discounts, I could have defined that here, and that would have transferred down to each and every trade agreement. So when that trade agreement was used at sales order entry or at invoicing, a particular GL account would have that money accrued in instead of your standard discount account you might have on your posting profile. So that's how I can define my sales program, define the different agreements that I have that come into play, which in this case is a funding agreement and trade agreements. I might also have customer rebate agreements that I would show here. I could also set up a price definition template if I wanted to do that, and have customers as well. We can cover those in a different webinar. But this program now has been rolled out. One final thing I'm going to do before we wrap up is just go through and process a sales order super quick. So I'm going to create a sales order. I'm going to create it from my company Forest. Actually, I'm going to go back here and do that from this screen. So some of the other functionality you'll see here is what we've added to order entry. I won't go into it too much, but at least you'll see it. So I'm creating a new sales order. I'm going to do a customer search. I know I want to use Forest. So that goes out there and looks on my accounts that I have out there for Forest Wholesales. I'm going to click OK. That's going to create my trade agreement. And now I'm going to do an item search. So in this case, I want to search on Fabricam. And in this case, I've got Fabricam listed as a manufacturer, so it's keying off that field. I also have it in a product name, so that went out there and found the product I was looking for. And I want to say I want to buy, let's just buy 8 first, right? So if I do 8, when I do that, it goes out there, it reserves the inventory automatically, so I've got it all in stock, and I've got color code feedback that tells me that. But what it's also telling me is I've got a little bit left to qualify. So if I look over to the right here as an order entry clerk or CSR, I can see that, if I get up to a sale of 10, I'm going to be able to give that customer a $5 discount. So I have that conversation. It's a potential upsell opportunity. The customer says, that sounds great. Let's go ahead and buy a couple more. So I'm going to buy 10. And at that point, it's going to go out there and it's going to find the agreement that we had, and it's going to apply that discount that we just found with that trade agreement. I can also look at the details, the calculated price details, and I can see very quickly as a CSR who wants to analyze my margins or what I'm going to be doing. I can see that my line discount was applied, and here's the funding agreement that is going to go into that. So I could analyze this sales order after the fact, see which trade agreements were applied, and look at the funding agreements as well if I need visibility of that. I could also actually switch out trade agreements if I was so inclined, looking at the selected ones, looking at remaining ones that were valid, and I can mix and match if I want to try to achieve a different margin level than what was originally calculated by just the way that AX finds trade agreements. Okay, but the key thing I want to show here is that I can apply these discounts from the sales program. I will have visibility to that at order entry. I will also have the visibility of the sales program ID, so that might represent a deal that a customer was specifically looking for in a price book or a catalog. So I've got all the information I need there. So now let's just go ahead and confirm the order. Click OK, confirm the order, and now I'm going to skip pick, pack, and ship. So there's really nothing to talk about from that standpoint. We'll just assume the warehouse has done their job. I want to go ahead and invoice it. I'm going to invoice my all quantity. Click OK. So now that will process the sales order. The invoice will be processed. The discount will be applied to the customer, so the customer hopefully will go out and pay me. But what's important here is that after my AR people are trying to get the money back from my customer, but also I'm going to have a rebate that was created based on that sales program. And this is a supplier rebate, so I can look at the details of this rebate. I can see that sales order I was just on. That's where that was the source of this rebate transaction. But that's from my customer information. But ultimately, the funding source is my Fabricam supplier here. So that's tied to the sales program. I've got all the sales program information associated with this. I've got my rebate calculated. So remember, that was a $4 rebate I was going to get back from my supplier. So this rebate has been created. This is for Fabricam, and then I would go and process the rebate how I normally would at AX, which is to go to the vendor account, go to the settle transactions, and then from there I can actually create an invoice register journal or an invoice straight to my supplier, send that out to my supplier, and get the money back. And hopefully after I've collected money from my customer, I've collected money from my vendors, I've dealt with any of the commissions I may have to pay out to the sales force, then I will have truly realize my margins and maybe even see what's the cost to serve that customer. This is the foundation for that. So that's kind of supplier funding of promotions that I'm going to be giving out to my customers. Let's wrap up here, go back to the PowerPoint. It's also important, again, this is an R2 version that we just went through, but obviously R3 is just around the corner for Dynamics AX. I think it's getting released this month. And it's important to know what else is coming into the story with base R3. It's going to have a robust deductions management piece, so that helps us with that deduction processing part of that order to cash story. Additional trade promotion options. Those are really better ways to give promotions out to your customers. Track those, have a funding budget for that. That doesn't really overlap with what we've added to the story on the supplier rebate side. There is some enhancements around vendor rebates. You'll be able to qualify these rebates both by quantity as well as amount tiers, dollar amount or currency amount tiers. There will be a hierarchical pricing by category, so you will be able to associate your pricing rules with particular categories and associated attributes instead of just at product level. And there will be an RFM calculation, so you have recency of your customer purchases, your frequency of your customer purchase, and then how much are they actually buying from you from a monetary standpoint. That's an important part of customer sizing and ranking the value of your customers, ultimately resulting in what kind of promotions do they deserve in your mind. So that ends my presentation today. That was Advanced Revenue Management, what we consider a complete order-to-cash solution, particularly in a distribution context in the supply chain world that we are all living in. Thank you for joining. Hope it was useful for you. Obviously, this is a solution, and we have more in the suite that we are happy to talk to you about at any time.